So Betfair trading has brought us a world where we can finally profit from our knowledge of sports. Traditional sports betting is all about value. Can you find odds where you're going to get a return that's above the chance that the odds suggest? A bit of value betting going on there. But Betfair trading is a bit more nuanced than that, and people often struggle to understand and come to terms with exactly what their objective is. So what I want to do in this video is show you specifically what your objective is, why it's ambiguous, but necessarily why that is probably the thing that is going to help you the most. So if you're interested in learning all about that, then just watch the rest of this video. So Betfair trading works really well. It works much better than traditional betting. However, people really struggle to come to terms with it. And, you know, at its core, it's really simple to understand. You lay at a lower price than you back at, or you back at a higher price than you lay at, and you net the profit between the two. There you go. Thank you very much for watching this video. I'll see you next week. But underlying that, there's a lot more complexity. And the problem is that most people who want to try and sell you something will position it in those simple terms, saying run the system and this is how you will make money. But true, proper trading is a little bit different. It's a little bit nuanced than that. And in order to show you that, I'm going to show you a couple of videos and then we're going to revisit these in a bit to give you, hopefully, a better understanding of exactly what your true objective is when you're trading on Betfair. So at first you won't get the relevance of these videos. The first video is of a shopping centre. I stood there and actually filmed it. Yes, I did do this for you. And it shows people walking in and out of the shopping centre. And then we've got a speeded up version of the same sequence occurring over a little bit of time. Now the second video, I went into a town centre and waited until I could catch one of these opportunities of traffic lights not working. Yeah, it's true, I did this for you as well. And if we watch this, this is going to teach you a little bit about how to trade as well. I know it sounds a bit bizarre, but hopefully I'll get my point across by the end of this video. Because the way that most people trade, or the way that they think they should be trading, is a bit different from the way that you actually should be trading. And in order to understand exactly how all of that plays out, it's important to understand how we would make money when we're trading whatever market we choose to do. So I should point out that the first thing is that there are many ways to trade a market, and every sport requires a different style. Whenever I've done videos, what I'm trying to do is point you to where the odds should be, or where they're likely to be, or scenarios that would make those odds unfold, because we already know the structure behind getting a successful Betfair trade. And you need to sort of figure out roughly where the odds are likely to go. But you'll notice I use the words roughly and figure out and probably and stuff like this. And that is because that's true, proper trading. A lot of people come to me and say, oh, you know, can you just tell me the one thing that I need to be doing? And I'm sort of saying, well, I actually have told you that already. But they're looking for some A, B, C, D type process that lays out for them just something that they can replicate. But proper real trading is a little bit different from that. Let me explain some more. So never forget that when you trade, if you trade at random, and I do this a lot because I gather data, I'm interested in the way the market's working and how often things are matching and all of those things, you'll end up with a pretty much random result. And that means you win as much as you lose over the long term, but of course you have to pay a bit of commission or whatever. Now the way I've illustrated this in the past is I've used a Galton board. And a Galton board shows you a normal distribution, and the way that it does this is you turn over the Galton board and all of the ball bearings fall down, and then miraculously they all form a normal distribution. This is sort of part of nature, part of life, is the way that the normal distribution occurs. And it's basically saying, in the terms in which we're looking at it here, you win as much as you lose over the long term. It's equally distributed. So how can you get this to be not equally distributed or asymmetrically distributed, as you would say in mathematical terms? Well, think about it. There are a number of things that you can do. Good execution, anticipating something within the market, knowing where the odds are likely to be and getting in the market ahead of that, doing all sorts of clever little things, you know, good execution, using software, all of these things will help tip that in your favor. But one of the interesting things about the way that trading works is that in your window in which you're trading, whether it's, you know, cricket, football, tennis, however, you do have a defined window in which you can actively trade. So if you fix your stake when you enter that window and do a trade, then you may find that that's normally distributed. But something interesting happens within the market, and that is that the trade that you've just done, when you go to do another trade, of course, the fixed stake that you were using, whether it's fixed permanent stake or fixed liability or something, is basically free for you to use in the market. So you've effectively reduced your maximum potential loss. If you do a second trade, you'll find that that is tipped in your favor, because the original stake that you're using has been reduced because of the amount of profit that you've got in the market. So the more trades you do in the market, generally that works better in your favor. You tend to find that the process of trading is something that can be beneficial to you as well as the tactics and other things that you're doing to try and get a positive trade. So never forget that, because a lot of people don't understand that. And it's very different from sports betting, where you're betting on the outcome of the event. You use a fixed stake and then you have the outcome. When you're trading, you can actually put a trade through more than once, and that works significantly beneficially within your favor. So many years ago, I was posted to another country briefly to learn all about the company I was about to work for. And on the way in one morning, I decided to just walk across the grass, and I could see that other people had done it. And when I returned the next day, there was a gardener out there digging up the turf. And I said to him, "Oh, what are you doing?" And he said, "Oh, I'm creating a path of desire." And I didn't quite understand what he meant at that time, but basically what he was saying was that because people chose to walk along the grassway, rather than sort of tell people off and tell them from stop walking on the grass, they basically just shifted the path to one side because it seemed to make an awful lot of sense. And the interesting thing is, ever since that day, I've noticed paths of desire absolutely everywhere I go. When they built a path in the local park to me, they actually built it to go around the actual park itself, but everybody just walked straight across on the shortest route. And when I went to hospital, you notice that people didn't use the pathway, they used a shortcut to get to the next section of the hospital. And when I went into town, suddenly I noticed that there were paths of desire everywhere. They planted a lovely flower bed outside the local Waitrose, and they put a sign up saying do not walk on it. So what did people do? They walked on it, because the path of desire was right through the middle of that walkway. And the funny thing is, people are very belligerent about this, because when you look at everything in life, everything follows a certain path. It doesn't matter what rules are in place and how carefully thought out or constructed, usually by committee, all of these things are designed. People don't use them the way that you would expect. And the interesting thing is, exactly the same thing happens in the markets. So let's get back to this video that I showed you a little while ago of people walking into a shopping centre. What you're seeing here is a path of desire. What you're looking at are people approaching the door, and then they're seeing that one door is closed and one is open. So human nature just dictates that people will go through that open door. And as a consequence, accidentally in this case, a path of desire was created. And if you lay down little rules for people, people tend to follow that particular path. And this is where the second video comes in, which is of the failed traffic lights, because all of a sudden the rules were removed from here, and what you actually have here is a fully free-flowing market. Nobody crashed, everybody drove normally, so you have to question what on earth the traffic lights were there for. Maybe to regulate flow at certain times of the day, but why not turn them off for the rest of the day, if that were the case? So these sort of things you see happening within the market all of the time, but it also neatly frames what your objective is within the market as well. Because what you're looking for is you're looking for clues. You're not looking for a hard and fast system-based approach. When I actively trade, for example, a horse racing market, what I'm saying here is that I don't know specifically where the odds are going to go. I'm just looking for clues as to where that path of desire is. Are we at a certain point within the market? Has the price come from a high level to a low level? Is the market running out of steam? Is this a common point within the market where the price could bounce off of it, like a nice round number? And as a consequence, when I'm actively trading, when people say to me, and this is why it's so effective, because all of these things are quite ambiguous. When you put a complete newbie in front of it and say, off you go, start trading, they sort of go, I don't know what I'm doing, I don't know what I'm looking for, or when I should do stuff. Can you give me some rules? Then all you can ever do, and all I've ever tried to do, is say to you, this sort of generally works, and this is the sort of scenario where you're likely to see it. This is a pattern that I've seen recurring. You're not saying that it's definitely going to work at that particular moment in time. What you're saying is, this is where it's likely to work. This is where we see biases within the market. This is where we see an open and a shut door. The barrier, the resistance, the support, whatever you want to call it, is at this particular point in the market. There's an open door there, but some people may actually still go through the closed door for one reason or another. So when you're actively trading, this is what you're attempting to do. You're not saying that you absolutely definitely know what's going to happen. You're just saying that you've got several clues in front of you that will give you guidance in terms of where you think this is likely to go. It doesn't mean that you can nail it, and it doesn't even mean that you could give somebody 5 or 10 minutes notice of what's going to happen. Sometimes you can, but those trades are 10 out of 10 trades that I'll absolutely smash to smithereens and make a lot of money on. But they just don't occur very often. What tends to occur most frequently is this ambiguous mishmash of stuff that's coming in and out of the market, and sometimes that you'll get it wrong. And this is where psychology comes into it again, because if you get it wrong, you shouldn't beat yourself up, because I didn't know either. You know, we're just trying to do the best that we can with the information available in front of us. This is what you would define as real trading. So trading works really well, but you have to accept some simple truths. The first thing you have to accept is that the market's sort of reasonably equally distributed, and you're just trying to tip things in your favor. You can do that through the process of trading and by having good setups and all of those sort of things in place. A lot of people are looking for something that, you know, just a really simple method to follow. But the problem is that trading is ambiguous. The markets are ambiguous. And what you should be doing is looking to move all of that in your favor. When you're trading, you're selling uncertainty, volatility, ambiguity, all of those sort of things. And part of the reason you're doing that is because people can't cope with that, and they find it really difficult to adjust to that. And you want to be on the other side of that. What you're effectively looking for when you're trading is not a defined, definite outcome. You're saying, well, I'm going to put myself in this position where I'm going to potentially profit, but I have to accept that I could get it wrong. You're looking for the market's path of desire. And if you combine all of those factors, then you'll do absolutely fine. And I'd like to leave you with a little note here. If you think that this video has been ambiguous, then welcome to the world of trading.